Canada's unprecedented immigration boom about to skyrocket home prices? Property owners and prospective buyers, brace yourselves. In a striking revelation that could shake the foundation of Canadians' real estate market, a recent report from TD Economists sounds the alarm for a potential crisis looming over the horizon. With immigration surging at an unparalleled rate, Canada is on the brink of witnessing its housing supply gap balloon by an additional 500,000 units on top of our 1.5 million units in the mirror of the next 2 years. Last year alone, the nation's population swelled by a staggering 1.2 million people, shattering records and setting a pace more than double of what 2019 and preceding years. A significant portion of this growth, 60% to be precise, was fueled by non-permanent residents, including refugee claimants and individuals on work or study permits. Meanwhile, the remaining 40% found their way into the country through the federal government's ambitious immigration targets, aiming to welcome 465,000 permanent residents in 2023, followed by 485 in 2024, and a whooping 500,000 by 2025. But what does that mean for current homeowners and those aspiring to dip their toes into the property market? For starters, this unprecedented influx of new residents is poised to ignite fierce competition for already scarce housing, potentially driving prices to new heights. Homeowners might find the value of their property soaring, offering lucrative opportunities for those considering selling. However, on the flip side, this reveals daunting challenges for prospective buyers who could face steep prices in a cutthroat market environment. Furthermore, this surge in demand amidst a lagging supply could exacerbate affordability issues, squeezing first-time buyers and low-income families out of the market. Investors and real estate strategists must also recalibrate their approaches as the evolving landscape could redefine investments, hotspots, and demands for different types of properties. In essence, Canada's rapid population growth, driven by this aggressive immigration policy, is set to redefine the rules of the game in real estate sector. Stakeholders across the board, from government policymakers to real estate professionals, investors, and the average home seeker, must brace for a period of dynamic change, where adaptability and foresight will be key in navigating the turbulent waters ahead. The group of non-permanent residents is an essential part of Canada's immigration strategy, which seeks to solve shortages in the workforce and attract skills in key sectors such as healthcare and technology. In the labor market, the benefits of the population boom are already apparent. Monthly job growth has averaged around 40,000 since the spring of 2022, while the monthly trend observed for 2010 to 2019 was 20,000. In the shadow of Canada's growing population, a stark warning emerges. The influx of non-permanent residents, while important to the labor market and economic growth, cast a long shadow over the housing market, threatening to plunge it into a crisis of affordability and availability. The recent report paints a grim picture for both current property owners and potential homeowners, as it forecasts a widening between housing demand and supply, a shortfall estimated to reach a staggering 500,000 units or more by 2025 if current immigration trends persist. This looming scarcity, exacerbated by declining construction levels, is not just a number. It's a warning of competition soaring, prices soaring, and market strain under the pressure of unprecedented demand. With construction starts on a downward trend and government policies struggling to make a swift impact, the reality of Canadians is a housing market teetering on the edge of accessibility. As Dr. Mike Moffat, economist and assistant professor at Ivy Business Schools, starkly puts it, the housing crisis exacerbates social issues such as homelessness, pushing us further into a pit of where recovery becomes increasingly challenging. Despite efforts at various government levels to expedite housing construction, the inherent delays in the system mean that meaningful improvement in affordability remains a distant dream. But the impact extends beyond just the numbers. The report warns of a textbook demand shock, where the surge in population translates into an overwhelming demand that the economy struggles to meet, potentially leading to higher interest rates and further eroding affordability. This is not just a housing issue. It's a societal challenge that touches on healthcare, social systems, and the very infrastructure that supports Canadian life. Amidst this backdrop, the report calls for a balanced approach to immigration and housing policy urging for the removal of workplace barriers and the integration of newcomers into society and economic fabric of Canada. The goal is not just to expand the economic pie, but to enhance its quality, ensuring that the benefits of population growth do not come at the expense of housing affordability and social harmony. Yet, there's a lurking fear, as it's been highlighted, that Canada's celebrated tolerance for immigration may wane under the strain of housing pressures, risking a societal divide that could undermine the nation's values. The question now is, can Canada navigate this tightrope between fostering economic growth and ensuring a stable, accessible housing market? Or are we on the precipice of a housing catastrophe that could reshape the very foundation of Canadian society? For homeowners, buyers, and policymakers alike, the time to act is now, lest we risk the future of our housing landscape and the social cohesion that binds us together and makes us Canadian.